All right, let's jump right in. Today, we are digging deep into Agnico Eagle's just released 2025 results. And let me tell you, they are an absolute blockbuster. We're talking about a truly historic year for the gold giant, one that really sets the stage for a massive decade of growth. So let's get into the numbers.
Right out of the gate, the headlines from their report are just staggering. I mean, we're talking about record-setting free cash flow. And they didn't just sit on it. They immediately put that cash to work for shareholders with a hefty 12.5% dividend increase. This really tells you everything you need to know about their story right now. Massive cash generation and a serious commitment to shareholder returns.
So, let's unpack just how record-breaking 2025 really was. In a year where gold prices were surging, Agnico Eagle didn't just ride the wave. No, they totally capitalized on it with what looks like near-perfect execution.
Okay, the headline number is almost hard to wrap your head around. $4.4 billion in free cash flow. And look, this isn't just because gold prices were high. This is a testament to some incredible operational efficiency and really disciplined cost control across their entire global portfolio.
Now, this metric is where things get really interesting. They captured 95% of the gold price increase. So, what does that actually mean? Well, it means that as the price of gold shot up, their own costs stayed impressively stable. And that allowed them to deliver almost all of that extra profit, that upside, directly to their bottom line. And, by extension, to their shareholders. That is the definition of delivering on your core promise.
And like I said, that cash did not just sit on the balance sheet. They turned around and returned $1.4 billion directly to shareholders through a mix of dividends and share buybacks. The bottom line here is that the success of 2025 was shared directly and very generously with investors.
And on top of all of that, they didn't just hit their own targets, they absolutely smashed Wall Street's expectations. If you look at the fourth quarter results, they beat the consensus estimates on both earnings per share and on revenue. For anyone investing, that kind of outperformance is a huge signal that you're looking at a company that is just firing on all cylinders.
Okay, so that was 2025, an incredible year. But how does that record performance build into the future? Well, Agnico is laying out a really clear and steady plan for the next 3 years. They're all about stability and predictability.
They're guiding for a very consistent, very stable production profile, somewhere between 3.3 and 3.5 million ounces a year. For the market, this kind of stability from a senior producer is exactly what you want to see, right? It provides this reliable, solid foundation that you can build everything else on.
But of course, the big question is always about costs. And the company was very upfront about this. Their all-in sustaining costs, or AISC, are projected to tick up in 2026. So what's really going on behind that number? When you break it down, it's actually pretty fascinating. About 60% of that cost increase, well, it isn't actually from operational issues. It's a direct result of making more money, which triggers higher royalty payments, and it's also from the impact of a stronger Canadian dollar. The other 40%? That comes from the industry-wide inflation we're all seeing and the specific way they're sequencing their mining plans. And that's a really important distinction to make.
And this is where the whole story pivots. This quote from the CEO, Ammar Al-Joundi, is just perfect. He's basically saying, yeah, the present is fantastic, it's stable, it's strong, but the real story, the real excitement, is about the future. This right here sets the stage for the company's long-term and very lofty ambitions. And believe me, that vision is incredibly ambitious. Agnico has laid out a detailed organic growth plan that is designed to completely transform the company over the next decade.
The target is so clear and powerful to become a producer of over 4 million ounces of gold every single year by the early 2030s. To put that in perspective, that's a 20 to 30% jump from where they are today. For a company of this massive scale, that is a gigantic leap.
And what's so important is how they're planning to get there. This isn't about going out and making risky acquisitions. No, this is all about high-quality organic growth. It's coming from projects they already own in safe, top-tier jurisdictions like Canada, and it's using infrastructure that's already in place. This whole formula is designed for low risk and high risk-adjusted returns for their shareholders.
So, the big question is, where exactly is all this growth going to come from? Let's take a look at the specific projects that are really the backbone of this whole 10-year plan.
Okay, so this is basically the engine room of their future growth. You add it all up, and these projects represent a potential 1.3 to 1.5 million ounces of new annual production. We're talking about massive initiatives here. like the Detour Lake underground expansion, the huge fill-the-mill strategy at Canadian Malartic, and bringing brand new mines like Upper Beaver online. Every single one of these is a major growth driver in its own right.
And they've given us a pretty clear roadmap that puts it all together. The company has laid out very specific timelines for us. We've got key decisions on huge projects like Hope Bay and Detour Underground coming in the next couple of years. And then, initial production from these new sources is slated for the late 2020s. See, this isn't just some vague goal. It's a series of real, tangible milestones for investors to watch as this vision starts to become a reality.
So after taking all of that in, what are the crucial takeaways here? What does the Agnico Eagle story really look like for the road ahead?
It really boils down to this: that record-setting 2025 has created the strongest financial foundation in the company's entire history. That strength supports a stable near-term outlook with managed costs, and that in turn provides the base for a clear, fully funded, and incredibly ambitious 10-year organic growth plan. And all the while, they're maintaining that powerful commitment to returning capital to shareholders. It's a really compelling, multi-layered strategy.
And so that leaves us with the ultimate question, doesn't it? The company has delivered a truly historic performance, and they've laid out a clear, bold path forward. Now, the challenge is all about execution. All eyes will be watching to see if they can turn this grand vision into the reality of the next decade.